ExamPrep.School. Colorado Surplus Lines Insurance Exam, and exam code InsCO-Surp82. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Eligible surplus lines insurers and approved lists. Exemptions and procurement conditions. Filings, disclosures, affidavits, endorsements, and courtesy filings. Premium rates, premium tax, reporting, annual statements. Purpose, scope, and key definitions. Records retention and penalties. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following best describes the primary purpose of regulating surplus lines insurance in Colorado's non-admitted market? A. To confine unique or high-risk exposures exclusively to the admitted market, preventing their placement with non-admitted insurers. B. To facilitate availability of coverage for exposures declined by admitted insurers while enforcing solvency oversight for non-admitted carriers. C. To enforce uniform premium rate limits across surplus lines insurers to match rates in the admitted market for consumer consistency. D. To exempt non-admitted insurers entirely from regulatory oversight in order to stimulate competition on policy pricing. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. The correct answer is that Colorado regulates surplus lines insurance to ensure that coverage remains available for risks that admitted insurers decline, while also imposing solvency standards to protect policyholders. Reason A is not correct. This description contradicts the purpose by restricting high-risk coverage rather than providing it through surplus lines. Reason C is not correct. Rate controls are not the central goal. The focus is on market access and financial oversight, not price alignment. Reason A is not correct. This choice includes all non-taxable child support without subtracting the above-the-line health savings account deduction. Question 2. A Colorado surplus lines broker offers a non-admitted placement to a business without explaining why admitted insurers declined coverage. Which rationale best reflects the consumer protection purpose behind regulating non-admitted placements? A. Non-admitted carriers often tailor coverage to unique risks unavailable in the admitted market. B. Placement speed is prioritized over full disclosure of coverage limitations to policyholders. C. Regulation ensures brokers disclose coverage differences and protect policyholder interests. D. Brokers reduce their own liability by placing risks with non-admitted insurers. The correct answer is C. The correct answer is based on the regulatory goal of ensuring brokers inform policyholders about how non-admitted coverage differs from admitted options, thereby safeguarding the insured's interests. Reason A is not correct. Customization benefits are not the primary consumer protection concern in regulating non-admitted placements. Reason B is not correct. Prioritizing speed without full disclosure contradicts the consumer protection objective of transparency. Reason D is not correct. Minimizing broker liability does not address the insured's need for informed decision-making. Question 3. Under Colorado law, surplus lines insurance is best defined as which of the following? A. Coverage procured from a non-admitted insurer approved by the commissioner when similar insurance is unavailable from admitted insurers. B. Coverage placed exclusively with insurers licensed in Colorado under surplus lines authority. C. A reinsurance agreement between authorized insurers to protect against excess losses. D. Liability insurance issued by a broker under an admitted insurer's license to cover high-risk risks like. The correct answer is A. This option correctly describes surplus lines insurance as coverage placed with a non-admitted insurer, After a diligent search shows admitted insurers cannot provide the coverage per Colorado statute. Reason B is not correct. This describes coverage with admitted insurers rather than placement with non-admitted insurers when admitted options fail. Reason C is not correct. This describes reinsurance among authorized insurers, not direct surplus lines placement from a non-admitted carrier. Reason D is not correct. This refers to admitted insurer policies issued by brokers, not placement with non-admitted carriers under surplus lines. Question 4. A Colorado surplus lines broker is advising a client seeking coverage that the insurer under consideration is not licensed by the Colorado Division of Insurance. The client asks how this status affects policy placement and protection. Which is the most accurate distinction between a non-admitted insurer and an admitted insurer in Colorado? A. Must submit its policy rates and forms to the Colorado Division of Insurance for approval before sale. B. Can be marketed directly to insureds without using a surplus lines broker if the risk is unaffordable in the admitted market. C. May be used to cover unique or high-risk exposures when admitted insurers decline, but is not protected by the Colorado Guarantee Association. D. Must maintain both a Colorado license and a surplus lines license to write surplus lines policies within the state. The correct answer is C. A non-admitted insurer is not licensed in Colorado, so its policies must be placed through a surplus lines broker and are not covered by the state guarantee fund, unlike admitted insurers whose filings are approved and whose policies carry guarantee protection. Reason A is not correct. Requires rate and form filings under state law applies to admitted carriers, not non-admitted insurers. Reason B is not correct. Non-admitted insurers cannot be marketed directly and must go through a surplus lines broker. Reason D is not correct. Non-admitted insurers are not licensed by Colorado and do not hold a traditional state license. Question 5. Which of the following actions would exceed a Colorado surplus lines broker's binding authority when placing coverage with an eligible non-admitted insurer? A. Binding coverage for an amount exceeding the monetary limit specified in the broker's written binder agreement. B. Collecting and forwarding the initial premium deposit to the insurer within 30 days after binding. C. Providing the insured with copies of the insurer's approved policy forms before binding coverage. D. Confirming the insurer's eligibility via the state's approved surplus lines list prior to binding coverage. The correct answer is A. A surplus lines broker's binding authority is strictly limited by the terms and monetary limits set forth in the written binder agreement with the non-admitted insurer. Any attempt to bind an amount beyond that agreed limit exceeds the broker's authority. Reason B is not correct. Collecting and remitting premium deposits within the specified time frame is a permitted activity under a valid binder agreement. Reason C is not correct. Distributing the insurer's approved policy forms to the insured is within the broker's role and does not exceed binder authority. Reason D is not correct. Verifying insurer eligibility on the state's approved list is required and does not conflict with binding authority limits. Question 6. Which of the following is a statutory requirement for a non-admitted surplus lines insurer to be deemed eligible in Colorado? A. Maintain a trust deposit of $250,000 with the Colorado Commissioner. B. Hold a financial strength rating of A or better from a national rating agency. C. Hold a policyholder's surplus of at least $15 million. D. Maintain a trust deposit of $100,000 with the Colorado Commissioner. The correct answer is D. The correct answer is that Colorado law requires non-admitted surplus lines insurers to maintain a trust deposit of $100,000 with the Commissioner to secure policyholder obligations. Reason A is not correct. That amount exceeds the actual deposit required by Colorado statute. Reason B is not correct. Holding a particular rating is not a statutory eligibility criterion for non-admitted insurers in Colorado. Reason C is not correct. No $15 million surplus requirement is specified for non-admitted surplus lines insurers in Colorado. Question 7. Which of the following capital metrics is specifically used by the Colorado Commissioner when evaluating the financial eligibility of a non-admitted surplus lines insurer? A. A combined loss ratio not exceeding 100%. B. A risk-based capital ratio of at least 200%. C. A return on equity of at least 8%. D. Minimum capital and surplus of $5 million. The correct answer is B. The correct answer is that Colorado uses a minimum risk-based capital ratio of 200% as a benchmark when determining non-admitted surplus lines insurer eligibility. Reason A is not correct. Combined loss ratio measures underwriting performance, not statutory capital eligibility. Reason C is not correct. Return on equity is a profitability metric rather than a statutory solvency requirement. Reason D is not correct. No $5 million capital and surplus floor is specified for non-admitted insurers in Colorado. Question 8. A Colorado surplus lines broker is preparing to place a $5 million professional liability policy for a public entity with Starshield Re, a Bermuda-domiciled insurer that holds no Colorado certificate of authority. Before binding coverage, the broker must verify whether Starshield Re qualifies as an eligible surplus lines insurer under Colorado law. Which action best fulfills the broker's obligation to verify insurer eligibility before placement? A. Review the insurer's AM Best Financial Strength rating and rely on that as proof of eligibility. B. Confirm that the insurer appears on the Colorado Division of Insurance's published list of eligible surplus lines insurers as of the placement date and document the verification. C. Rely on the insurer's participation in an international guarantee fund in lieu of state-level eligibility requirements. D. Obtain a Colorado certificate of authority issued to the insurer for surplus lines business before binding coverage. The correct answer is B. The correct answer is to verify on the official Colorado Division of Insurance eligible surplus lines insurer list as of the placement date and to document the verification, which meets the surplus lines broker's statutory obligation. Reason A is not correct. Financial strength ratings do not substitute for official state approval and listing. Reason C is not correct. International Guarantee Fund membership does not meet Colorado's surplus lines eligibility requirements. Reason D is not correct. A certificate of authority is for admitted insurers, not for non-admitted surplus lines carriers. Question 9. Which of the following accurately describes how surplus lines brokers in Colorado place risks with Lloyd's? A. They need only verify that the Lloyd's broker has a local office in Colorado before placing the risk. B. They may rely solely on the Lloyd's Central Fund's eligibility status without verifying individual syndicate approvals. C. They can bind coverage through Lloyd's without obtaining evidence of excess line status if the lead underwriter holds a Colorado license. D. They must confirm that each Lloyd's syndicate underwriting the risk appears on the Colorado surplus lines insurer eligibility list before binding coverage. The correct answer is D. The correct answer is that brokers must verify each Lloyd's syndicate. Underwriting the risk is on Colorado's approved surplus lines list prior to binding coverage, ensuring compliance with eligibility requirements. Reason A is not correct. This option is incorrect because having a local office is not sufficient. Each syndicate must be approved on the eligibility list. Reason B is not correct. This option is incorrect because verifying only the central fund status does not satisfy the requirement to confirm each syndicate's eligibility. Reason C is not correct. This option is incorrect because the lead underwriter's licensing does not replace the need to verify the surplus line's eligibility of each syndicate. Question 10. In Colorado surplus lines transactions at Lloyd's, the term syndicate participation most accurately refers to A. The commission percentage that a surplus lines broker receives for each syndicate utilized. B. The proportionate share of risk that each Lloyd's syndicate member commits to underwriting a policy. C. The sequence in which multiple syndicates are listed on a surplus lines certificate. D. The separate regulatory filings required for each syndicate before placement. The correct answer is B. The correct answer is that syndicate participation denotes the portion of the risk liability each syndicate member agrees to underwrite within the Lloyd's marketplace. Reason A is not correct. This option is incorrect because syndicate participation describes risk sharing, not broker commissions. Reason C is not correct. This option is incorrect because the term does not refer to listing order, but to underwriting commitment. Reason D is not correct. This option is incorrect because it refers to procedural filings rather than the allocation of risk. Question 11. A Colorado surplus lines broker places a commercial property risk through Lloyd's of London using a Lloyd's slip. Under Colorado record-keeping rules for surplus lines placements, which documentation must the broker maintain to clearly identify the Lloyd's placement? A. Slip identification number and syndicate managing agent name. B. Evidence of declination notices from 3 admitted insurers. C. Certificate of incorporation for the Lloyd's syndicate. D. Copy of the broker's binding authority agreement with Lloyd's. The correct answer is A. The correct answer is the slip identification number and syndicate managing agent name, because Colorado requires brokers to keep records that uniquely identify a Lloyd's placement. And the slip ID combined with the managing agent details provides that specific linkage. Reason B is not correct. Evidence of declinations documents diligent search but does not identify the specific Lloyd's contract. Reason C is not correct. A syndicate's incorporation certificate is a corporate document and does not serve to identify an individual placement. Reason D is not correct. The binding authority agreement defines scope of authority, but does not uniquely identify a particular slip placement. Question 12. Which statement most accurately captures the regulatory intent behind Colorado's approved list of eligible surplus lines insurers? A. To oblige brokers to conduct insurer-specific financial analyses for each surplus lines placement to ensure risk adequacy. B. To streamline surplus lines transactions by maintaining a pre-vetted roster of insurers that satisfy Colorado's financial solvency and market conduct requirements. C. To compile a directory of non-admitted insurers authorized to issue admitted policies in compliance with state form filing requirements. D. To identify high-hazard insured risks that require surplus lines coverage due to lack of available admitted market options. The correct answer is B. The correct answer reflects the statute's goal of reducing regulatory burden by using a pre-approved list of financially sound insurers whose market conduct meets state standards, thus expediting surplus lines placements. Reason A is not correct. This choice misstates the intent by focusing on case-by-case financial analyses rather than reducing broker due diligence through a pre-vetted list. Reason C is not correct. This option confuses surplus lines eligibility with admission and form filing requirements applicable to admitted insurers. Reason D is not correct. This distractor shifts focus to identifying high-risk insureds rather than pre-approving insurers for placement efficiency and solvency assurance. Question 13. A Colorado surplus lines broker is finalizing a binder for a commercial property policy with Zenith Surplus, an insurer not admitted in Colorado. Before binding, the broker needs to confirm that Zenith Surplus is eligible on Colorado's approved list. Which action should the broker take to satisfy this requirement? A. Access the latest approved surplus lines insurer list on the Colorado Division of Insurance website before binding the coverage. B. Rely on the insurer's own website statement that it is authorized to transact surplus lines in Colorado. C. Verify Zenith Surplus's status through the NIIC's General Non-Admitted Insurer List. D. Obtain a written attestation from the insurer confirming it meets Colorado surplus lines. Eligibility criteria. The correct answer is A. This action is correct because the Colorado Division of Insurance maintains and publishes the official approved list for surplus lines insurers. Verifying eligibility on that list before binding ensures compliance with state requirements. Reason B is not correct. Relying on the insurer's website does not confirm official approval because only the Division of Insurance's list establishes statutory eligibility. Reason C is not correct. The NAIC's general list is not authoritative for Colorado-specific surplus lines eligibility, as the state maintains its own approved list. Reason D is not correct. An insurer's attestation does not replace the requirement to verify presence on the official state-approved list before binding coverage. Question 14. According to Colorado surplus lines regulations, which action best satisfies the diligent search requirement before placing coverage with a non-admitted insurer? A. Placing coverage with a non-admitted insurer once any admitted insurer indicates an unwillingness to write the risk. B. Securing verbal statements from two admitted insurers that they will not provide a quote within 30 days. C. Reviewing online rating guides of admitted insurers to confirm lack of available coverage without documenting specific declinations. D. Obtaining written declinations from at least 3 admitted insurers licensed in Colorado whose underwriting manuals indicate they would consider the risk, assuming that number of insurers is available. The correct answer is D. This option is correct because Colorado law requires documented written declinations from a specified number of admitted insurers whose underwriting guidelines show willingness to insure the risk prior to placing with a non-admitted insurer. Reason A is not correct. A single indication of unwillingness does not fulfill the requirement for multiple documented declinations from admitted insurers. Reason B is not correct. Verbal statements do not satisfy the regulation's requirement for documented written declinations. Reason C is not correct. Online reviews without specific declination documentation fail to prove that admitted insurers declined the risk. Question 15. A Colorado surplus lines broker is documenting that admitted insurers have declined coverage for a $2 million commercial warehouse. The broker obtained 2 declination letters. One simply states coverage isn't available. The other notes the risk exceeds underwriting guidelines. Under Colorado surplus lines regulations, what additional evidence must the broker provide to satisfy the diligent search requirement? A. A declination from a third admitted insurer to reach the required 3 declinations. B. A signed statement from the insured acknowledging prior declinations. C. A detailed summary of the broker's underwriting analysis for the risk. D. A credit report of the admitted insurer's financial stability. The correct answer is A. The correct answer is to obtain a third declination letter, because Colorado requires evidence of 3 distinct declines from admitted insurers before placing with a surplus lines insurer. Reason B is not correct. This is incorrect because an insured statement does not substitute for actual declination letters from admitted insurers. Reason C is not correct. This is incorrect because the broker's underwriting summary does not meet the regulatory requirement for distinct insurer declinations. Reason D is not correct. This is incorrect because an insurer's credit report is unrelated to documenting declinations under diligent search rules. Question 16. During a surplus lines placement, a broker submits a declination letter from an admitted insurer that only states, "not writing this risk." The surplus lines carrier requests additional proof. What is the most appropriate corrective action for the broker to satisfy Colorado's diligent search rules? A. Submit a broker's narrative summarizing unavailability of coverage. B. Include the insured's recent 5-year loss history with the declination letter. C. Gather declination letters from 3 distinct admitted insurers citing underwriting standards. D. Initiate a courtesy filing to circumvent additional declination documentation. The correct answer is C. The correct answer is to obtain declination letters from 3 separate admitted insurers that reference specific underwriting criteria, as Colorado requires evidence of multiple declinations with reasons. Reason A is not correct. This is incorrect because a narrative does not fulfill the requirement for formal declination letters from admitted insurers. Reason B is not correct. This is incorrect because loss history does not substitute for a declination letter specifying underwriting reasons. Reason D is not correct. This is incorrect because a courtesy filing does not waive the need for proper declination documentation under diligent search rules. Question 17. Under Colorado surplus lines law, which of the following must be met for an insured to qualify as an exempt commercial purchaser? A. Purchases surplus lines insurance only from admitted carriers for annual premiums above $25,000. B. Pays surplus lines premiums of at least $25,000 annually for each of the past 2 consecutive years. C. Maintains a net worth of $20 million or more, as evidenced by audited financial statements. D. Pays surplus lines premiums of at least $50,000 annually for each of the past 3 consecutive years. The correct answer is D. The correct answer is paying surplus lines premiums of at least $50,000 annually for each of the past 3 consecutive years. Colorado statute designates this premium threshold over a 3-year period as the exemption criterion, without reference to admitted carrier usage or net worth. Reason A is not correct. This option is incorrect because the exemption applies to premium thresholds for surplus lines policies, not to purchases from admitted carriers. Reason B is not correct. This is incorrect because the statutory exemption requires a 3-year consecutive premium history, not 2 years. Reason C is not correct. This is incorrect because net worth is not a criterion under Colorado's exempt commercial purchaser rules. Question 18. MJL Electronics, a Colorado industrial firm, has a net worth of $18 million and plans to pay $12 0 inches surplus lines premiums for its new high-tech machinery coverage placement. Under the exempt commercial purchaser provisions of Colorado surplus lines law, why is a broker not required to obtain evidence of declinations from admitted insurers before placing this risk with a non-admitted insurer? A. The firm's net worth exceeds the statutory minimum for exempt commercial purchasers. B. The high-tech machinery value exceeds the admitted market limit, negating declination requirements. C. The annual surplus lines premium payment exceeds the threshold for exemption from diligent search. D. The broker's binding authority provides automatic exemption from obtaining admitted market declinations. The correct answer is C. This option is correct because Colorado surplus lines law exempts commercial purchasers from diligent search requirements when their annual surplus lines premiums exceed the statutory threshold, and paying $12 000 meets that condition. Reason A is not correct. The insured's net worth of $18 million is below the statutory net worth threshold required for exemption. Reason B is not correct. Machinery value does not determine exemption. Only net worth or premium thresholds apply. Reason D is not correct. Binding authority does not substitute for required declination or exempt purchaser criteria. Question 19. According to Colorado surplus lines regulations, before binding coverage on behalf of a non-admitted insurer, a surplus lines broker must first obtain which of the following? A. A certificate of deposit filed with the Colorado Division of Insurance to secure the insurer's obligations. B. A written binder or power of attorney from the insurer specifying coverages, limits, and binding authority. C. A signed acknowledgement from the insured confirming awareness of surplus lines tax and notice requirements. D. Advance payment of estimated surplus lines premium tax to the state treasurer. The correct answer is B. The correct answer is that a surplus lines broker must secure written binding authority from the non-admitted insurer before binding coverage, ensuring the broker acts within the scope approved by the insurer. Reason A is not correct. A certificate of deposit is not required before binding coverage. It may secure certain obligations, but is not a prerequisite binding condition. Reason C is not correct. Insured acknowledgments are required for disclosures, but are not a prerequisite for binding coverage authority. Reason D is not correct. Premium tax payment is due after binding and placement, not a precondition to binding coverage. Question 20. A Colorado surplus lines broker binds coverage for a commercial property risk with a non-admitted insurer before obtaining the required declinations from at least 3 admitted insurers. According to Colorado surplus lines regulations, which of the following actions must the broker take to correct this placement and comply with procurement conditions? A. Treat the original binder as void and advise the insured to seek coverage through an admitted insurer. B. Allow the coverage to remain valid and correct any procurement deficiencies before policy renewal. C. Promptly obtain and maintain written declinations from 3 admitted insurers and file the surplus lines affidavit. D. Reclassify the transaction as an admitted placement, applying admitted carrier rate filings. The correct answer is C. To comply with Colorado procurement prerequisites, the broker must secure declination letters from 3 admitted insurers and file the surplus lines affidavit within the regulatory timeframe to avoid penalties. Reason A is not correct. The binder is not automatically void. The broker must remedy procurement documentation rather than shift to an admitted insurer. Reason B is not correct. Procurement deficiencies cannot simply be deferred. Required declinations and filings must occur within the prescribed period. Reason D is not correct. A failed surplus lines placement is not treated as admitted. Reclassification is not an authorized correction. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.